So it's see, like a good example of this is when you guys break down your portfolio and you can say 24% of our return has come from this profit inflecting turnaround thing. When you think about that, imagine if you didn't have that data and you're looking at your small cap portfolio, you're listening to this, you're thinking, I pick stocks and I hope one goes up a lot, you know, versus having the intelligence to analyze the data and be like, no, where did it actually come from?
But the thing is this is all what we would call ex ante. It's all backward looking, right? Very good, fantastic, nice, come and give you some nice stats and tell you what we've done. Well, we know where our next 25% of returns is coming from. Like, it's not going to be as precise as looking backwards, obviously, when you know. But I think having that ability to say, hey, in the next 12 months, like we're expecting this, this, and this. The returns are here. That's because of these, you know, drivers of these businesses. I think it's really valuable to us and makes our job a lot easier to have really strong conviction in what we're doing.
Ben, if you were to pick from these other companies, Catapult, PointsBet, MMA Offshore, AFG, Megaport, and Imdex, which one would you say best illustrates or is most interesting for people that are thinking about what does that inflection and profitability look like? Like, which one would you say kind of demonstrates that?
I would say PointsBet's probably the other primary example, but I note that we have spoken about it a fair bit over the last kind of 12 months, just because it's been such a clear illustration of something which has gone from unloved and cheap and low quality to a bit better quality and better understood, and eventually got to take over a bit at over $1 a share. Megaport's another one which has been discarded, but I would say perhaps more interesting is what's going to be the next one, which I think is starting to turn the corner kind of as we speak over the last couple of weeks. I might handball it over to Luke to talk about his Australian Finance Group, AFG.
AFG. Go for it, big dog.
It's gone nuts.
Has it?
Well, it's gone up a lot. So,
how long have you held it for?
Almost since inception.
Since inception, and it's not made us any money other than the dividends, which
dividends
have been
good. Yeah, dividends are really good. So,
you talked about this ages ago, though.
Mate, I've been on this podcast talking about AFG for 2 years. So,
until someone listens.
Yeah. Like,
but I remember it because you named it as like an interesting dividend company, and I was
it is a great dividend company.
Yeah, because you were saying something about like the because this is for people that aren't familiar. This is an aggregator for mortgages and that sort of stuff. They connect mortgage brokers to loans and customers and stuff, and uses technology. It's pretty awesome. But I remember this and I was like, what do you mean dividend stock?
Yeah, everyone is surprised. But I mean, they have a really good established market dominant mortgage broking business or mortgage aggregator business, to be more specific.